Sorab Agarwal, Executive Director at Action Construction, is joining us now to talk more about the company. Mr. Agarwal, I know you're a busy man these days. Capex early signs are getting clearer, and since you have almost 65% market share in mobile cranes used for pick and carry, I mean, at least in Mumbai, I can tell you that wherever I go, massive construction is going on. Action Construction cranes are all over the place. So talk to us about how are your utilization levels? Where are the incremental orders and discussions coming from?
Things seem to be great, and I think it's not only Mumbai, but it's all across the country. And now we've also started exporting in reasonable numbers, which we intend to increase. See, things and activity have been happening all across. We are primarily supplying to infrastructure and construction, which is increasing on a boom right now. And apart from that, about 40-50% of our cranes also going directly to manufacturing. So we're seeing a lot of traction there as well. So on the whole, things seem to be moving in the right direction. And with respect to our utilization levels, in cranes, we are already touching about 85-90%. And we are already expanding. So hopefully that expansion should play in by Q4 latest, where we will expand our capacity, maybe in Q3. And similarly, I would say that in construction equipment and metal handling, we are operating close to about 55-60% in these two segments. Agri is a little subdued, about 40-45%.
Post your expansion, which will come on stream in the third quarter, the full impact of that will only be seen in 25, not in 24. So what kind of numbers are you looking at closing year 25 with on this expanded base?
See, if I talk of capacity or let's say our ability to increase our revenue to what level, then it will be close to about 3,800 to 4,000 crores with the expanded capacities. And I feel that this year again, we should be able to utilize part of it for about 4-5 months, 3 months, primarily in Q4. So, please go ahead. Yeah.
No, so that's the question here. Right now, what, 2,200 crores for FY23? It's likely to double by FY25. You're saying 3,800 to 4,000. And in terms of the order book, do you have that visibility right now for the capex?
See, in our type of business, people are generally not willing to wait for deliveries. So, generally we have an order book for about 1.5 to 2 months, which is a rolling type of scenario. So when the demand increases, the more you're able to produce, the more you're able to sell. Otherwise, you lose business to competition. So going by that, that's what we decided once we started touching 80% utilization in things that we need to expand. And currently that expansion is under process. So I'm hopeful that in Q3 we should be able to utilize some part of it.
So given the fact that utilization is already 85-90%, you're looking at expanding your capacities, getting more volumes in as well. What does it mean in terms of the profitability? Are you able to command a better price, and hence the margins and profits are also expected to improve? So top line will go to 4,000. What will, let's say, the bottom line and the margin look like?
See, the bottom line will automatically improve with the operating leverage playing in with our numbers increasing. So, and within this year, I think we are looking at least 50 basis point increase in our EBITDA margins, if not more. And going forward, I think we should be again looking at something similar for the next year. That's what it appears to be. And with respect to commanding better margins, we are generally a very fair company to our customers, and we are not opportunistic that, the demand is more, supply is a little constrained because of different factors. We try to increase prices. So I think we'll go slow and steady with our customers, because if they benefit, then only we go.
So which means in margins, what you're indicating is that current 12% levels could go closer to 14 by end of 25. And your 262 crore was kind of EBITDA in absolute terms. When your top line doubles in the next 18 months, how much in absolute terms are you going to touch, say, 400 crore or thereabout in EBITDA?
I think, let's say 14% EBITDA looks possible. But our capacity will go to about 804,000 crores. I feel that this year we should be growing about 15-20%, maybe slightly more. We'll be in a better position to inform that maybe in the end of Q2. Next year, again, we should be able to do something similar. So again, just to correct, the capacity will go up to 3,800 to 4,000 crores of revenue. How much we are able to attain, maybe 3,000 crores plus 3,500 crores, that I think the second half of this is a better time to project that.
Take that point that the capability or the capacity with that number is around 38,000-4,000. The actual basis, the occupancy and the utilization can be lower. Just quickly, I know you're talking about a lot of levers when it comes to the domestic demand. What about exports? Because they are currently a small part. Do you expect that also to ramp up?
Yes, internally, we have planned to take exports to at least 15% of our revenue on an increased base, which will keep on increasing hopefully year on year. So in the last year, we were able to increase it by 2% from 4.7% to 6.7%. And we are very hopeful that in the current year, it should be somewhere around 9 to 10% with respect to contribution to our overall revenue. And it seems to be on track with our plans.
Sorab, you spoke about exports. We understand that there is also, a capex boom of sorts. Yes, in a very moderated and a very kind of a environment which is there a marred slowdown. But the only way countries come out of this slowdown is by conducting capex, right? It's being called as the decade of capex. So, what kind of export opportunities are opening up for you?
Till 4 or 5 years back, we were never focused on exports. It's only in the last 2 or 3 years that we brought in our focus. And we are going to more or less all parts of the world, and to South America, to Africa, Middle East, Southeast Asia. And with the BS5 standard kicking in next year, so our emission standard would be at par with the developed world. So we are also currently working on upgrading our products, so that in the next 1.5 to 2 years, once BS5 is also in place and we have experienced that, maybe we can also try and take some of our upgraded products even to mainland Europe. That's our intention.
Okay, Mr. Agarwal, on that note, we'll let you go. Really appreciate you making time and speaking with ET Now today.